Okay, so today we are going to study Chapter 9, Property, Plant, and Equipment. We are going to do 7 to 8 next week. So we're going to do the chapter 9 first, the Property, Plant, and Equipment. We often refer to this category of asset as PPE. Okay, Property, Plant, and Equipment. So property, plant, and equipment are long-lived resources, okay, are long-lived resources. So these resources are controlled by the company. They are tangible. You can touch it. They have a physical form, physical substance. You are able to see it, touch it. Okay, they are tangible, have physical substance. Are used in the operation of business. So you use this long-lived asset in your operation. Are not intended for sale to customers. Okay, so you want to use it for your operation. You are not use it as inventory. So if you have carry inventory, you are hoping to sell it to the customers as soon as possible. But this long-lived asset, your intention should not be to sell it to customer, right? You keep it in your operation. The idea we say this is long-lived asset, long-lived resources. It's because these resources are able to provide economic benefits over many years. Okay, over many years, and they are considered as non-current asset. So in the previous chapters, we have learned about the concept of current asset, right? So often those assets can be converted into cash within 12 months of one operating cycle. Those will be considered as current asset. Okay, it is relatively easier and quicker to convert them into cash. But the long-lived asset, we consider them as non-current asset because normally you will not sell it within a year. Okay. So, for example, University of Lethbridge have the science building, right? So the science building is considered to be a long-lived resources, okay, a long-lived asset. You can see it was controlled by U of L, so U of L can decide how to use the building, even though it's called a science building, right? University, right? They can use it for other purpose, right? It doesn't have to be a science building. They are tangible. You are able to see it. You are able to follow the stair steps, right? You are able to feel it, touch it. They are used in the operational business, and some of the students will go to that building to take classes, right? The professors are using part of the building as their offices, right? So it is in the operation of the business. They are not intended for sale to a customer. So it's not like U of L is going to sell this building to a third party 1 year after the construction, right? They are not a construction company. They are not a flipping constructed asset, right? So for them, they're going to use this building for many years for their operation, which is to educate students, okay? So in that case, this is the property, plant, and the equipment. They are non-current asset. So how to determine the cost of property, plant, and equipment? Okay. So often when we think of the cost, we always think about the purchase cost, right? How much does it cost me to buy that stuff, right? And sometimes if you purchase it on the Boxing Day, you get a good deal, right? You get a discount, right? So normally it's $100, but on the Boxing Day they have 10% off, right? So you actually pay $90, right? So the purchase price is net of discount, rebates, right? And the non-refundable taxes, right? So if a student paid on computer, they paid for a GST, those ones are non-refundable because later on when you learn more about the income tax, you know that often the terminal consumer, they are the person who is ultimately paying for the GST. Companies, they buy things from the supplier and they sell it to the customer. When they are paying GST on the purchases from the supplier, those GSTs will be considered as input tax credit and they can get the money back for the companies. But if you are end consumer, so you don't sell it to anyone, to the next person, you use it, you consume the product or the service. If that's the case, that those GSTs, they are non-refundable, okay? So when you record the cost of PPE, you have to include the non-refundable tax portion. Okay, let's say we are having a projector in the classroom, right? So you would say, yeah, that projector is a long-lived eyesight, right? Because the projector is owned by university, okay? And it's controlled by university, right? It's tangible, you can touch it, you can feel it, you can see it, okay? And it is used in the operation, right? The teachers is going to turn on the projector so that you can see the slides better, okay? And you don't sell it to customers. You're going to use the projector until it dies down, right? So what's the cost you need to record on the balance sheet of University of Lethbridge, right? What does that projector hung on the ceiling in the classroom? Well, you know that, okay, so obviously I didn't made it, I purchased it from Best Buy, so I paid a purchase price. So that should be part of the cost, right? Okay, so let's say you go to a superstore, you go to Best Buy, you paid for the price, right? So you have it on, you have that record projector with you. Now it belongs to you, belongs to U of L. At Best Buy, is that eyesight for University of Lethbridge? So you haven't walked out of the Best Buy yet. You paid for it. It's your projector, okay? Is that projector an eyesight to U of L yet? Anyone? So you paid for it. U of L paid for it, but the U of L, the buyer, okay, representing U of L, is still in Superstore, in the Best Buy. So they have the projector with them. Is that projector an eyesight to U of L at that point? No. Camerprint said no. Why? Why is not an eyesight to U of L at that point? Your answer is correct. But why? Okay, so Camerprint, Demi, you guys both correct. Okay, so it's not an eyesight to U of L yet. But why? It's not under the control of U of L. It is, right? If the representative from U of L paid for it, they decide to throw it into the garbage, and they can because they have paid already. So if you paid for it, that projector does not belong to Best Buy anymore. It belongs to U of L. Okay, so U of L has the control. Anyone else? So what is the asset, right? The asset will generate cash revenue, right? Yeah. So think about you have a projector at Best Buy. Okay. So U of L generate revenues through government fundings and students' tuition. Okay. Can you imagine you guys will all go to Best Buy to listen to your lecture teaching you accounting? Because why? Because projector is there. If that's I yes, the projector is not ready for the intended use, right? So in order to recognize it as your eyesight has to be ready for the intended purpose of use. So the projector is intended to be installed in a classroom in a science building, right? So there will be additional cost to bring the projector to the classroom and then have somebody, technicians, to install it onto the ceiling, right? So you can see the cost of this projector in the classroom, right? It's one, to make it ready for the use of the instructor in the classroom. There will be additional cost, the shaping cost. You need to deliver shape that product into the classroom, and then the installation cost, right? Someone has to install it, mount it to the ceiling, right? So you can see that the cost of that eyesight PPE is not just the purchasing cost, okay? There'll be additional expenses to bring the eyesight to its location and make it ready for the intended use. Okay, does that make sense? If that makes sense, please give me a thumb up. 1, 2, 3. Okay, thank you. Okay, for some other situation, there are other interesting prospect, right? So if you have a gas station, right? Your gas station, the people will drive their vehicles to your station to fill up their tank, right? So like a gas station operation is subject to strict environmental law, right? Because you cannot guarantee 100% that there'll be no leakage of the oil, the gas to the soil, right? So we have seen that, when people are not top up, right? If they top down, then those remaining gas inside of the pipes will be dripping down, right, to the soil. And the idea is environmentally, this is not friendly. The soil is considered as being contaminated, right? And in the future, that location becomes desirable because with the city's development, it is getting closer to a commercial zone. So government has to rezoning that piece of land, okay? But guess what? That location has been using for gas station for many years, and there is the environmental pollution, right? So we have to deal with it. We have to treat it, right? So the owner, if they need to shut down this gas station, it's their job to take everything down and also to treat the soil properly, okay, to make it good for the next use, right? So if they are building a residential house, people would be really sad if that location was contaminated without being properly treated, right? So the idea is when you are thinking about the cost of the building, not only you are thinking about the current cost, right? I need to pay for shipping cost. I need to pay for installation cost. You also need to consider in 30 years, when I'm ready to get rid of it, there is a significant amount of cost will incur, right? To fulfill my environmental compliance, right? So the idea is the cost of the eyesight also included in the future when this eyesight is to be removed, restored at the end of the useful life. Okay, and what is that future cost would be? Okay, and then you have to convert it that future cost to today's dollar in order to record it today. Okay, so PPE normally subdivided into classes such as land improvement, buildings, and equipment. So PPE is a very broad category of long-lived eyesight. So if you consider subcategories, we have land improvement, such as landscaping, right? You build the fences and driveway, right? Sidewalk. So those will be the land improvement to increase the land's accessibility, to increase the beautiful, the environment, right? The pretty, right? So if you do landscaping, right? So land and land improvement and the buildings and the equipment. So this would be the PPE's categories. So does anyone have any question before I move on to land? It's clear? Awesome. Good. So let me keep going. So land. So I guess we all understand what land is. So what is the cost of land? So there's a purchase price, right? When you buy land, you have to pay for a price. And there are the cost you pay to the lawyer, right? So legal fees, right? So when you buy or sell a very expensive property, you will not do it by yourself, right? Because there are a lot of complicated legal considerations, right? Tax considerations. So you always find professionals to help you. In this case, if you are making purchase of a building, a house, a land, you probably will hire a lawyer to do the work. Okay, so there are the legal fee, and you also need to do the survey or the title search, right? Just to make sure that nobody else claim a title on the same piece of land, right? Because you don't want to get into the legal problem, right? You buy the land and then realize that actually another person also claimed the ownership of the land. So then what are you going to do, right? So you want to do a good title search. So the only person on the title is the seller, right? And so when you purchase the land, the title will be transferred from the seller to you. Okay. So no other third parties, right? There are additional costs to prepare land for its intended use, right? So for example, when I was in Alberta, I lived in Clodagh. I purchased a property. The property is like very, very old and crappy house, small, okay, and outdated. If you first saw it, you feel that it's almost unsafe to live in the house. It's going to collapse, right? And the land was awesomely landscaped. There's lots of mature trees, right? So when I purchased the land, my plan is to develop the land to build new houses. Okay. So in order for me to prepare the land, to get the land ready for the construction of the new house, I have to take out all the trees. Okay, the landscapings, I need to take everything out. Okay, pave the land, right? And I need to demolish the old house. Okay, take all the garbage out. Okay, and then prepare the road, prepare the land, get it ready, right? So eventually, okay, I would have open space land, right? Just a piece of land, okay, and it's leveled, right? And everything has been done properly. Now they're ready for the construction. Right? So the reason for this is because that's my intended purpose. I intended to get the land cleared out and then make it ready for a new house construction. So therefore, if I hire people to take out the trees, to level off the land, right, to take down the houses, all this additional cost should be part of the cost of land, okay, part of cost of land. Land has unlimited life, therefore it's not depreciated. So land is something that you cannot wear it out, right? So if you try to wear out land, probably your shoes will be weared out first before before there's any damage to the land, right? So land has unlimited life. It's not depreciated. And in fact, that in many areas in Canada, right, the land value appreciate very fast, right? If you think about Vancouver, the city of Vancouver, a very piece of garbage house, very old house, worth like $2 million, but it's not the value of the house, right? Because the house has no value. It's been there too old, right? People needed to, it's even liability. People has to take it down and clear everything out. But so what is really valuable is the land, right? So in British Columbia, in Vancouver, this land price has been gone up very fast. That's probably mostly driving that housing price up, right? So land, remember, because it has unlimited life, so therefore we do not recognize depreciation for land. Does anyone have any question? What is salvage value? Salvage value is kind of like a residual value, right? Salvage value is it's kind of like a residual value. So basically, if you think about you are using the eyesight at the end of the useful life, what is the value left? That is the salvage value at the end of the life, at the end of the useful life, right? So what is that value of the eyesight? Okay. Okay, so what is land improvement? So land improvement, so paving, fencing, sidewalks, driveway, right? So these are the things are trying to increase the functionality of the land, right? You make it easier to access to the land, right? So for example, fencing you are protecting that piece of land from other creatures or peoples to get in, right? And the sidewalks, right? So you want to make sure that you are not walking in the muds in a rainy day, right? You have concrete, you can always walk on the sidewalks. Land improvement is not a land, right? So land improvement will lose its value gradually. So unlike land does not lose its value, but land improvement will lose its value over the time, right? So for example, the fences, right? The fences will fall down one day, right? Even though you build it brand new, but given another 5, 10, 15, 20 years, the fence will be broken, and you need to replace it with new fence, right? So you should recognize the depreciation of land improvement. Even let's think about sidewalks, right? Sidewalks in the beginning it's very flat, smooth, right? Concrete, beautiful, very nice to walk on. But given a few years, what happened is the soil under the sidewalk will thank, and so then the sidewalk on the surface will crack, right? Will be like ugly, right? It won't look very good. So the point is, like fencing sidewalks, they will age, right? They will become, the value become less and less, right? So therefore, this land improvement is in a different category, because unlike land, right? Land, there's no depreciation, but land improvement, we need to recognize the depreciation expenses for the land improvement. Okay, so anybody have any question? Anyone have any question? No? Okay, awesome. So this is land improvement. So buildings. So when you think about buildings, you can buy existing building, okay, or you can build your own building, right? So that's the ways to acquire the ownership of a building. So if you purchase a building, there's a purchase price, okay, and you still need to hire a lawyer to do the paperwork, so that everything is done properly and does not leave any room for future disagreements, right? Future legal actions. And also, there are the costs required to make the building ready for its intended use. So for example, the building was used for a restaurant business, okay? So then you can think about, in that building, there must be quite a bit of open space, right? So that there's enough tables for the customers to sit in, right? To eat in. Dine in, right? And then there is a clear separation between the floor space and the kitchen, right? I don't think customers are allowed to enter into the kitchens, right? So let's say I bought this building, okay, but I have no interest at all in running a restaurant, right? So I'm going to run an accounting business. So now I need to convert the spaces into a accounting professional office, right? So you can see how the structure of the space will be totally different between an accounting firm and a restaurant, right? But in order to make that building for my intended use, for my customers coming into that room, does not feel like this was a restaurant, okay? So I have to renovate that building, right? I have to redo the frames, right? Set up more walls to divide those open space into different units of office for my worker, right? So you can see that there's an additional cost, right? So those costs are necessary to make that building for intended use, which is to run accounting firm. So therefore, when you purchase the building, It's not just only purchase price, the fees you pay the lawyer, but also the cost incurred for you to get that building ready for the use. Okay, the second aspect would be when the building is constructed, right? So if you are constructing a building, you need to hire an architecture to design the framework, right? To design the building. So you need to pay architecture. In order to build, you have to apply build permit from the local government. Okay. So you probably need a foundation, right? So therefore you need to excavate a pit, right, where you can pour a solid concrete foundation, right? And then on top of the foundation, you can start building the wood frames, right? So if you are short in time, you probably need to borrow money from the bank to get the project going, get it done, right? So then if you borrow money, there are interest costs while you are constructing the asset. So therefore, those interest costs are also considered as your cost of a building, right? So does anyone have any question here? Okay. Equipment. So there are different types of equipment, right? You think about computer equipment, right? Lab equipment, vehicle equipment, machinery equipment, right? There are different equipment, but the equipment is that it's kind of like a very big category, okay? So when you record the cost of equipment, you should include the purchase cost, price, and also the freight charges, right? Sometimes this equipment are very heavy. You cannot easily fit that big, giant equipment, heavy equipment into your caravan, right? So then you have to probably hire a trucking company to deliver that equipment to your factory. So that free charges, right? Sales tax, right? For this equipment, you probably pay GST 5%. But if you are able to, if you are a business, that you are able to get GST back. So in that case, the GST tax is not refundable tax. Cost of insurance during the transit paid by the purchaser. Okay. So let's say your equipment is very delicate. Okay. So maybe like a piano, right? So it's very expensive. It's hard to find another piece. Maybe it's antique, right? When the trucking company is shipping that equipment to your house, so anything can happen in the transit, right? So I know it's a low probability, but what if happened that the truck was in a car accident, okay, and then the piano was seriously damaged, cannot be used, okay? So often maybe they will buy insurance just to cover any risks like this. So the cost of insurance, that will be also part of the equipment cost. So once you have the pieces delivered at your location, it does not generate revenue like that. You have to assemble all the pieces together, okay? And then you have to be able to test it to make sure the equipment is set up correctly, is running smoothly, it gives you the desired result outcome, right? So for land improvement, building equipment, does anyone have any question? give me sum up if you understand everything. 1, 2, 3. Okay, awesome. Thank you very much. Okay, and now expenditures during useful life. Okay, expenditures. So English is also my second language. So now I have to teach you the difference between expenditures versus expenses, right? So many students would think that, are they the same idea, the same concept? And in our life, oftentimes we just use them interchangeably, right? But from the accounting perspective, expenses, they are two different things, right? From accounting perspectives, expenditure is a cash outflow. Okay, so the cash left you from your pocket to another person's pocket. That's called cash out. That cash outflow is called expenditure. But if you say about expenses, right? Expenses. So expenses is an item on the income statement. Well, you remember that on the income statement, you have revenue and expenses, right? So expenditure is not the same thing as expenses. Okay. So the next, I want to differentiate the two types of expenditure. One is operating expenditure. The other one is called capital expenditure. Okay. So how we can know whether an expenditure, a capital or operation? Okay. So remember this, if that expenditure has increased the revenue generating ability of the asset, okay, then it should be a capital expenditure. So I will say this again. If the expenditure has increased, enhanced the eyesight's ability to generate revenue, then this expenditure is a capital expenditure. Otherwise, it's an operating expenditure. Okay. So if I'm an eyesight, at least I hope you think I'm an eyesight. Okay. That means you believe that I'm a good instructor, I'm useful, okay, and I can generate benefit for university. Right? So I want you to think about it. If I, like many ladies, apply the fingernail oil, right, to my fingers to make my hand pretty, okay, let's assume it's not real in life, right? So do you think that expenditure paid to the to that person who did my nail, do you think that's an operating expenditure or capital expenditure to me? Right? Think about me as eyesight. Okay, if they did all the paints to my fingers, is that operating or is capital? Operating. Why hemoprate? Why is operating? The answer is right. It is operating. But why is operating? It's not increasing any value of me. Okay, that's good. Yeah, that's the answer. So think about this, right? After I did the fingernail, when I'm teaching you, I'm going to show off my fingernails. Okay, so I'm going to just like position like this, and then I will keep teaching you accounting. Okay. So these fingernails, beautiful fingernails, will make me feel so confident that I will do a wonderful job to teach you, right? So then there's more value there because obviously if I can teach you better and if my teaching is more efficient, you know, that value generating ability is stronger. Another friend of you heard about me, they decided to stand up with UFL, right? To listen, to come to my class. But that's for temporary times, will not affect productivity. Yes, because you don't care, right? You know, I'm here, I was not paid by physical appearance, right? If I'm paid by physical appearance, you guys probably will just fire me, right? Look at me, I don't have too much hair left, okay? But you know, very sadly, 20 years ago when I first came to Canada, I was an international student. I have lots of hair back then, okay? But I don't have money. I was poor. I have lots of hair, lots of energy, but I don't have money. But now it's the opposite. I have more money, but I don't have hairs, and I don't have energy. So it's really sad. Uh, so the idea is, you know, I'm here not because physical appearance, it's because my talent in accounting, right? So if you do fingernails, it does not add up anything to that critical point, right? So, but let me ask you, if university paid me a heart transplant surgery, okay? So university, I'm sick, and university, well, you need a new heart, right? So they're gonna do a heart transplant surgery on me, okay? And then I'm recovered, I'm very happy, right? So in that case, do you think the expenditures to the doctors are the capital or they are operating? So then, yes, it's a capital, right? Because I can live longer, I can serve UofL many more years, and I'm generating the revenue longer, right, for UofL. Right? So you can see the difference between capital expenditure versus operating expenditure, right? Okay. So operating expenditure, you recognize it as expenses, okay? So you debit the expenses, you credit the cash, right? But for capital expenditures, you will debit asset, right? You debit asset account. It's going to increase the cost of the asset, okay? It's going to increase the life of the asset, its productivity or efficiency. If that's the case, it's a capital expenditure. So does anyone have any question about operating expenditure and capital expenditure? If you understand everything, give me a thumb up. 1, 2, 3. Anyone have any question? Okay. Buy or lease, right? So suppose you are thinking of have a vehicle, right? You are thinking of have a vehicle. Well, you can do it in two ways, right? You can either buy a vehicle or you can lease one. Okay. What are the advantages of leasing? So if you buy a car, it's gonna cost you a more upfront payment, right? So you need at least have a down payment, and then you get probably financing through the car dealership, right, or the car manufacturer. Okay, but if you lease it, okay, you probably made a payment for the leasing on a monthly basis, you have little or no down payment. The second one is reduce the risk of obsolescence. Okay. Think about how technology developed. Okay. I used to own quite a few monitors. Now I have to throw it away. Back then, I paid a lot of money to buy those monitors. Okay. But now it's all dated, right? And if I want to give out to people for free, nobody is willing to come to pick it up. It just, it's old technology. People don't like it. Even you give them for free, they won't use it, right? So you can see that. So maybe it's sometimes people tend to think if I own something, right, I keep it for longer, right, and the benefit will be longer, right? It doesn't not necessary, right? So I own computer for many years, but only probably the first couple of years it's very useful. After that, my computer is slower relatively to the new computer, right? And there are all old features, old fashions, right? The new computers, they have new fashions, right? Same idea for cars, right? So you could if you own the car, you're gonna own it for 10 years, right? And then 10 years, 15 later, your car is kind of like obsolete, right? But if you lease, you lease for every 3 years. So every 3 years you get a new car, right? Right? So you don't worry about being obsolete, right? Of course, right? It's not cheap to lease, right? That's probably the problem. I don't like leasing the way because it's quite expensive to lease a car. Okay, to lease a car. I don't want to talk about this. The bio lease, the IFRS lease rules versus ASPE lease rules. These topics will be covered at the intermediate financial accounting. So at this level, I don't think it's that helpful to make that difference. Okay, to make that difference. Okay, so this is my section 1. Okay, this is my section 1.